Welcome back, stock market traders. The market continued to sell off today, Wednesday, January 19, 2022. Gapped, looking at the daily chart of the S&P 500, it opened higher, slightly higher, try to move higher, but it reversed, dropping below the 100-day moving average and yesterday's low. So today's price action was very bearish. It closed also very bearish, that it closed near the lows of the day, with the big sell-off actually occurring during the last hour of the trading session. Now it's sitting on support. This support, which was the low about 3 weeks ago. So for tomorrow, if this level holds, this yellow zone, I would be interested if it bounces off that. If we open a little bit higher, tests that level and bounces higher, I will be looking for an entry point. However, if we gap lower, the next level that I'll be watching very closely will be here under the 4,500, which was this low right here. For resistance, definitely will be the 100-day moving average and that 4,600 level. If you remember my previous video, I mentioned that I would be interested in buying if it pushed about 4,600. Well, it did first thing in the morning. I was watching it very closely, got up to 4,610, found resistance, very heavy resistance at that level, and reversed lower. And I didn't really see a setup or a reason to buy. So levels that I'll be watching tomorrow for an entry point, like I said, will be this level here and down here. Anything in between, I will not be interested. But I think the best buy point would be down here. Really, if it gaps lower, sells and reverses after finding support here, there'll be a nice reversal day, especially after this big move. However, if tomorrow, like I said, this would be an interesting point also. This zone, today's low, bounces off that, and I'll be looking for an entry point. Next is the Nasdaq 100. This one, big sell-off also. And this one is very close to the 200-day moving average, where I mentioned in my previous video that I would be interested in buying. If I see a reversal or signs of a change around that area, I will be looking for an entry point. If that fails, the next support will be 14,900. So really, in reality, anything here, I mean, it can just stay here, that low, today's low, and the 200-day, and then this level. So anything in here, if it traces in this area and I see signs of a reversal that it wants to push higher, then I will be looking for an entry point. And my stop loss will be the day's low. If we open higher, I'll be watching these levels very closely, which is which would be very strong resistance. But I think the best setup would be down here. I think tomorrow has a good chance of finding a good or a short-term bottom, but we'll see. Now take a look at the Dow Jones. This chart keeps getting uglier, keeps breaking below. Here, from 3 days ago, 4 days ago, it has dropped below all these moving averages. It's not right above the 200-day moving average, but it was very strong uptrend. I mean, it's still in an uptrend by definition. It's still making higher lows, but it has become very choppy. Levels that I'll be watching tomorrow will be the 200-day moving average and today's low around 35. That level around 35,000. Below that will be this zone right here, the green one. and for resistance will be the 100-day moving average. So a bounce on the 200-day moving average will be very bullish, especially if we gap higher and the gap holds. I think it would have enough momentum to push through a strong resistance, which would be this area right here and the 100-day moving average. Let's now take a look at the Semiconductor Index. Really big down day for this index today. But the good thing is that it's sitting right on the 100-day moving average. See if it holds. But it closed near the lows of the day, so chances are, chances favor a gap down in the morning. But if we don't, if we instead gap higher, I think that gap will hold and will have enough momentum to start pushing through all these resistance levels. If this fails to hold above the 100-day moving average, I don't really see much support anywhere until down here around 34.50 and the 200-day moving average. I will be watching this level very closely tomorrow. It can quickly become resistance or support. Let's now take a look at small caps, Russell 2000 IWM. Of all the indices, technically, I think this one got the most damage. Just the fact that it it wasn't able to push above or to get above that 210 pivot point, and it closed near the lows of the day. Now I had to zoom out and go back like over a year just to see what was going on a year ago. Now it was in this range for many months after a big move higher. So you can call this, a topping pattern. Maybe this was a top. One interesting thing that I noticed exactly a year ago, January 19, it was this, that candle right there. I'm talking about this line right here, this black one, this pivot point, the 210. That day, exactly a year ago, it opened higher, it dropped, found support, and pushed higher that day right there. I don't know if you guys can see it. Now, today, the interesting thing about today is that it opened lowered, tried to push higher, got rejected at 210, and moved lower to the downside. So it was interesting that they touch exactly the same price level. One bounced off of it, and the other one today, it got rejected. It was exactly a year ago. I thought that was interesting. This one, technically, I don't even know where I would be interested in buying, playing a bounce. I think if it bounces, it will just bounce because, the other indices will bounce, but I don't really see like any technical point where I can say, buy off that support level. Because in reality, you don't really see anything from here, from 205 down to whatever you can see 175. You see that it just kind of just went up over a year ago. It just kind of went straight up. So there's like really no pivot points. Anyways, today was really bad for this Russell 2000. Thank you for watching, guys, and good luck trading tomorrow.